Welcome to Module 2, Section 1. What I'll be covering in this section are just some basic concepts, some high-level definitions, just to give you an idea of what it's like to get involved in the stock market and the different things that you will have to face. Some of these will be fun things. Some of these will be very easy for you. Other times, they're not a lot of fun, and they're not very easy to overcome. Many of the things that I'll put forth in this section are going to sound like common sense, but especially when it comes to investing or trading in the stock market, common sense doesn't seem to be very common. Yet we still need to go over it, and we still need to try to make that part of becoming a successful investor or trader. Is there a secret when it comes to the financial markets or the stock market? Everybody seems to think there is, but is there really a secret? There is no holy grail, whether it's a person who knows everything and tells you what to do at exactly the right time, a system, just get involved in this program, or just get into this software and use this and you're just going to see unending riches. No, that does not happen. Or you may have a combination of the two, where there's a person who teaches you a system. Now, just to be completely fair, I would be one of those people. I am a person and I have a program that I teach, but I am no holy grail. I can help you. I can really point you in the right direction. I can teach you things that you probably don't know. I can show you things based on my experience that will help you. But when it comes right down to it, there is no holy grail, either a person or a system. It just doesn't exist. But there's still this basic idea that there is one somewhere. And if we look hard enough, if we just pay enough money, if we find the right person, we will uncover the answer. That just doesn't happen. If there was some kind of a secret or holy grail to the markets, don't you think it would have been discovered by now? People have been trading back and forth for thousands of years. Don't you think after all this time, if there was some kind of a secret, if there was some big mystical answer to this whole thing, that it would have been discovered by now? Yeah, it probably would have been. But just about the time somebody thinks they have the answer, things change, or too many people start to use this answer, and the system has a way of breaking down. If you want to have success in anything in life, but in the stock market in particular, you have to overcome two things. These are two big hurdles that we have to deal with. The first one is fear, and I'll go into more depth of what that means. And the other one is greed. And you probably have an idea of what these things mean already, but I'm going to break it down and apply it to you and to the stock market so that we can turn the negative things around and use them to our advantage and take the positive things and even reinforce them. Success can also be achieved much easier by embracing two things. We take fear and greed. We try to deal with those the best that we can. We'll never be able to eliminate them completely because we're human and we make mistakes and we have emotions. But if we embrace two other things, that will help us enjoy more success. We want to reach a level of maturity. Now, that sounds very simple. Think about your life. How did you think about things when you were in your 20s than when you were 8 or 9 years old? If you're in your 40s or 50s, look at how you look at things differently now. That only comes through experience and with time. The other thing, of course, is to follow a plan. I talk to people all the time that want to get involved in the financial markets or the stock market or the crypto market or the gold market, and everybody wants to do the same thing. They want to make money. That's their plan. Well, if you want to go from Los Angeles to New York, how are you going to get there? There's a lot of ways you can do it. You can take an airplane, you can take a train, you can drive, you could even walk, theoretically. But what is the best plan for you? You have to come up with a plan that works. That's not the hard part. The hard part is actually following the plan and sticking to it when you're in the heat of battle and you're dealing with emotions, especially if things are going against you. And it's like that plan just evaporates. And suddenly now you have turned from investing or trading in the stock market to gambling. And at that point, you're just playing with luck. Most do the opposite of what is needed to be successful. If being involved in the stock market was so easy, and if you wanted to go beyond just a buy and hold strategy, which is what most people do, and that has its place, but if you really want to see higher returns and a higher success rate, and possibly even enjoy financial freedom because of the stock market, most people fail when they try to do this. I've seen statistics anywhere from 90 to 95% of people that start off thinking, this is for me. Well, within a year, most of those people are no longer even active. They think it's going to be really easy. They're told by other people that it's easy. They're told, just hang on to what I tell you to do, and success is all but guaranteed. Well, the reality ends up being much different. The first thing I'll talk about is fear. Every person possesses fears, and these can include a lack of knowledge or of the unknown. A lot of times, a lack of knowledge is not necessarily fear because we didn't know to be afraid of something. But then another kind of fear that I've noticed in some people is the fear of the unknown. If we don't understand something, we immediately try to throw it away. Nope, that's a different way than what I'm used to doing it, so I'm not going to really consider that. There are usually two types of people that I've observed. Let's say you go and meet somebody else for the first time. It could be a coworker, it might be somebody who eventually becomes a friend, but you don't know anything about this person. Are you the kind of person where when you meet somebody else, do you start off by saying, okay, I'm going to give this person a chance? I immediately give them trust. I immediately think that what they're saying is true. And then over a period of time, does that other person prove what you gave them right off the bat? Or do they disprove that and you start to lose respect for them? You start to lose trust for them. You start to believe that maybe everything they say can't be trusted. Other people, when they meet somebody new, they don't trust them, they don't respect them, and they don't believe anything they say right off the bat. That's the default setting right there. Then over a period of time, as that person proves themselves, now some respect will develop, some trust will develop. You know that what they say is the truth. What kind of person are you? The person who fears the unknown tends to be the type that starts off by not trusting something, not respecting something, not thinking that they're being told the truth, and you have to prove it to them. And I'm not saying either one of those are right or wrong, whether you start off trusting somebody or you start off not trusting somebody. It's the way we are built. But there are a lot of people who, when presented with a new idea, they get immediately defensive. And then over a period of time, that wall might come down and show them that, hey, yeah, this really is pretty good. I can trust this. I can respect this. And then for both sides, moving forward, is the trust, is the respect, is the truth still justified? We also have a real fear of missing opportunities. Boy, if only I had gotten to Microsoft stock when it first went public back in the mid-'80s. Oh, if only I got into Bitcoin when it was trading under $1. Oh, if I only had bought this stock when it was at 5 and now it's at 300. There's a real fear that we're going to miss opportunities. Why do you think they have advertising? Why do you think stores have sales? They want to entice you to come to the store because you're going to save money. You won't spend as much as you would have spent otherwise. And so there's a fear that you're going to miss out by spending less money to go to that store and buy what they want to sell you. That is a form of fear. And if you don't get there right away, you're going to miss that opportunity. The one nice thing about the program that I teach is there are more opportunities than any of us will ever be able to take advantage of. So if you do miss an opportunity, that's okay. There are other opportunities that present themselves possibly daily, certainly weekly and monthly. There's another fear of losing what is already possessed. Let's say you've worked your whole life, 40, 50 years. You've built up a nice little nest egg. You have retirement from your work. You have your own portfolio. What happens if things change? As I record this, the stock market is at or near all-time highs. At some point, that all-time high is going to be there for a long time because we're going to change and start going down. And people that have been able to see a lot of growth in their portfolio are suddenly going to start to see that go away. What happens if things really do change and the market starts to go into a downtrend where currently it is in an uptrend? Do you have plans to retire? Do you have plans to pay off your house or get out of debt? Do you have plans to start a business? What happens if the value of your portfolio, which you're going to use to do some of these things, starts to go away? And now the things that you wanted to do, you won't be able to do. The nice thing about the program that I teach is I can show you ways to basically insure your portfolio so that you're not going to get wiped out. Or you could get to the point where you break even. Or you can even take advantage of things going down and make profits from that. A lot of people don't really understand the opportunities that are available to them. Another fear is not having enough time, money, or both. The two biggest excuses that I hear when it comes to the stock market is, number one, I know the stock market is important, but I don't have any time. Well, we always find time for those things that are important to us. That's why I teach classes. That's why I do a lot of the work for you. It's still going to take some of your time, but by getting involved in a program where I do most of the work and then I present the information that I found to you, you can take that, develop a skill, and where you would spend an enormous amount of time doing this by yourself, this helps you to lessen that time. And now you can focus on what you're actually trying to do, and that is be profitable in the stock market. The other excuse is, I don't have any money. Well, there are programs out there where people might be willing to put up some money on your behalf, where they put up the money, you do all the work, you have some kind of a partnership agreement, and you might split the profits 50-50, 60-40, 80-20, or something that you come up with. What I would recommend is learn the skill. That's the important thing. If you get to be good at what you do, opportunities can make a way of coming to you where the money or funding that you needed will be made available. The idea is to learn the skill first. Do you think great athletes or great musicians started off by getting paid a lot of money? No. They had to work for a long period of time practicing their instrument or perfecting their sport and playing for free, if not having to pay other people to do those things. Then you get to the point where things start to shift, where instead of you having to pay to get music lessons or you having to pay to learn how to play a sport, now people are starting to pay you to play music or play that sport. And you become a professional at that point. The stock market can be the same way. So the first goal should be to develop the skill. Don't worry about the other things. When it comes to time, you're just going to have to say, is this important enough to me so that I can develop the skill, even if it means giving up other things? And we also have a fear of being totally free. As I record this, there's a real attack on freedom, especially in the United States. And a lot of people are not even aware that this is happening. But the idea behind each person is they want freedom, the ability to go where you want to go, to do what you want to do, to be who you want to be, and not have money dictate what you can and cannot do. You just want the freedom to be able to say, this is what I would like to do, and I have the opportunity to actually do it. Sometimes that is a little dreamy because the reality of life starts to kick into gear. We have jobs, we have a family, we have obligations, and those are our responsibilities. And a lot of times we can't really have a lot of freedom because we do have those other responsibilities. Wouldn't it be nice if you could get to the point where the responsibilities that you have could be taken care of? And then you can go above and beyond that and have the freedom to explore other things. Another fear is overcoming apathy. Do you ever feel overwhelmed by things? You just think, oh my gosh, there's so much to learn. There's so much to do. It's going to take me forever to get involved in this. And so you get to a point where you just don't care anymore. And a lot of American culture has really turned that way. America was built on determination, on sacrifice, on dedication, on trying something new. And if you failed, you got knocked down, you got back up and you tried again. A lot of the culture has gotten to the point where now we depend on other things or other people to take care of us, and we don't really care. We would rather spend our time on social media or spend our time binge watching something on Netflix. As long as I have that, then I'm happy. Now, I'm not saying there's anything wrong with those things, but people just get to the point where they don't care. It's like, yeah, I'd like to be rich. I'd like to do the things that I want to do, but they're not really willing to do the work to make those things actually happen. Why do you think gambling in Las Vegas is so popular? Why do you think the lottery is so popular? People want an easy road to riches where they get a lot of money without doing really any work. And true success in life just does not work that way. Then on the other side, we have something called greed. Each person must also deal with greed, and every person has to deal with this on some level. This can include, of course, wanting more. If you have $1,000, you want $2,000. If you have $1 million, you want $2 million. More, 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 more. We want that. And that is part of greed, having pride in having less. This might be a little strange to you. I know a few people who try to have a minimal life and they try to be ultra cheap. And it's like, okay, that's fine if you want to do that, but they take a real pride in that. And they think that there's some kind of righteousness by self-denial. And so they can't really participate in different things because they feel it would go against their idea that they should have less in this life. And that is a source of pride. And if any of you ever study the 7 deadliest sins, what is number 1? Pride. That's the worst sin of all, thinking that you have it all figured out and other people don't, and that you're the greatest and nobody's as good as you, and that you're naturally going to do really well when other people are going to fail. That's just pure foolishness. But if you take a real pride in really limiting the things that you can have in your life in its own little way, that is a source of greed. Hoarding all these things, being ultra cheap. If you have any money, you stick it away. And that's okay. Saving is wonderful, and people need to do that. But is it taken too far? Losing focus. Everybody I ever met in my life wants to have lots and lots of money. And they get all rah-rah about something. They think this next program or this next teacher or this next thing that is coming along is going to be the answer. And then when they realize, man, there's some actual work involved here, we lose focus. Now, some of this is understandable. We have lives, we have obligations, we have families, we have jobs. These are different things that pull at us that require our attention. And then when you get to the point where, okay, now I want to be involved in the stock market, well, you're tired. You have family obligations. You might have to work extra. You might have other things going on in your life. And this idea that you started out with, you say, well, I just don't have enough time to do it today. And then you end up feeling the same way tomorrow. And before you know it, this idea just kind of floats away. I meet a lot of people who want to become involved in the stock market. Let's say I meet 100 people. A year later, there might be 1 or 2 that are still actually doing it. Because when they realize that there's work involved, when they realize there's some sacrifice and dedication that's involved in this, suddenly it's not as fun anymore. It's like taking piano lessons when you're 5 years old. It's like shooting free throws over and over in front of nobody. If you don't love it in and of itself, and you're not willing to dedicate yourself to this, you're living off emotions, and emotions change. And what was all exciting one day suddenly gets forgotten about the next day. Then looking for a quick answer or solution. As I stated earlier, we look at things like the lottery or going to Las Vegas or something where we're going to take a little bit of money and turn it into a lot of money over a short period of time with no risk. Why do you think Bitcoin is so popular right now and all the cryptocurrencies? People don't care about the technology. They don't care what it can do for people. They just see something moving around all over the place, and they've been told by a few people a little bit of what it means. And now they think, oh yeah, I can take a little bit of money and turn it into a lot of money. That's all they care about. Those people quickly fall by the wayside. And this is nothing new. This has gone on for hundreds, if not thousands of years. And one of the other classes that I teach talks about different manias and bubbles that we've had throughout history. And some of those have happened 300, 400, 500 years ago. Now let's turn the corner and look at something that's a little more positive. I have a program called the SPX Investing Program. In that program, my goal is to try to teach you maturity when it comes to the stock market and to not only understand what is happening, but to take advantage of what is happening and being able to handle it in a mature manner, both when you're right and when you're wrong. What I try to do is give you good knowledge. Knowledge is power, which is gained by education. It can be by reading a book. It can be by going to a seminar or a class. Hopefully, some of you are finding some value in watching this video right now. But somehow we need to be educated. It may not be in a formal setting. It may be more like an apprenticeship or some type of a situation where you go alongside somebody else who is already successful and you learn from them. But somehow there needs to be knowledge that is gained. This knowledge then leads to power. Like in the first sentence, I said knowledge is power. Well, what can you do with power? Power leads to what we call foresight. Now, we all know what hindsight is. That's looking back and saying, oh, I woulda, coulda, shoulda. How would you like to be able to have foresight, to see things before they actually happen? You won't always be right, but you'll get to the point where you are right a lot more than you're wrong. And when you are wrong, no big deal. You have a plan in place to take care of that. And when you're right, you can enjoy the fruits of success. Foresight that we gain allows you to see things before they happen and take full advantage of opportunities. In the program that I offer, you get to the point where you can see things develop before they happen. Now, this doesn't happen overnight. It takes you time to develop this skill. That's why I don't tell people what to do. I provide my own analysis of what I think's going on, and I provide commentary about what's going on. I help you to understand what to look at and what to look for, and I might give you some ideas, but ultimately each decision comes down to you. You make your own decision, and that's really something that we've lost in American culture. We want to be told what to do instead of getting all the information that we can and reaching our own conclusions and then making our own decisions. We think we do. We think for ourselves. I'm an independent, free thinker. Really think about that. Are you? How many decisions are you able to make each day that are really based on foresight and based on your decision making? Some of you will be able to answer that yes, a lot of the decisions that I make are made that way. Some of you go, wait a minute, I feel more like a cow in a herd where I'm just being told to go this way and told to go that way. I'm not really making any decisions for myself. Another way to build maturity are through looking at opportunities. Most people get into the stock market with the idea of buy low and sell high. Well, did you know that you can get into the market where you sell high and buy low? Now, some of you are like, well, that makes absolutely no sense. Throughout this course, I will teach you what that means, and I hopefully will help you make sense of that concept. Or there are other periods of time when we don't really go anywhere. The stock market may not really be going up with any conviction or down with any conviction. It's pretty much treading sideways. There are ways to make some really good returns in those kind of environments. Or a lot of you, as I mentioned earlier, you spent a lot of your lives trying to develop or build some kind of retirement or portfolio. And if things really do turn, you are at the mercy of the markets at that point. Do you know that there are ways that you can ensure what you already have? You can protect what you've already gained. There are a lot of opportunities out there to do these things, not only opportunities to make more money, but opportunities to protect what you already have. And there's no big conspiracy that's keeping this from you either. There's no fat cats on Wall Street that don't want you to know this. It just needs to be uncovered. And there are millions of investors out there who do implement lots of different opportunities. But we need to learn what are those opportunities and how can we use them to our advantage. The next thing, of course, is success. If you get into the market and you pick some really good investments or you have some really good trades and you get on a roll and maybe you see a 7 out of 10 success rate, or maybe a 9 out of 10 success rate. You see your equity curve start to increase, which means overall you're making money. That really leads to confidence. You're like, wow, I'm really starting to enjoy this. I'm really seeing some success. My equity curve is increasing. My success rate is high enough so that when I lose, I don't lose very bad. And when I win, I really get to enjoy a good profit. That's when it gets kind of fun. In athletics, we call that in the zone. Or in music, when you get into that other realm where instead of just playing the notes, now you're actually making music. And that's when it really gets fun. And this can happen in the stock market. It takes some time to develop this, and it takes dedication, but this can happen. And then confidence ultimately leads to maturity. It's not pride. Don't mistake maturity or confidence for pride. They are two completely different things. You can be humble, yet be very confident at what you do. Of course, a lot of people, they have a lot of pride and they have confidence in what they can do, but when it comes down to it, they're not very mature about it. So the idea is to not develop a sense of pride, but just have that confidence knowing that I'm not going to be right all the time, but I have confidence in what I'm trying to do. And now I have a bit of a track record that shows I know how to do it. And welcome to the land of maturity. I'll also spend some time talking about following a plan. I do teach in my program how to follow a plan. Without a plan, you're not going to get anywhere. If you get in your car one day and you decide you want to go somewhere and you just step on the gas pedal and go, where are you going to end up? You might end up in a field somewhere. You might bash into the side of a building. You might hit another car, or you might end up in New York. You don't know because you didn't really have a plan. You just said go. Well, you have to have a plan. First of all, a good plan that you develop, and then secondly, a plan that you actually follow. The idea is to have a systematic plan that you follow every day, every week, and every month. Now, some of you are longer term investors, and you will only make decisions 1 or 2 times each year. Others, you may trade more on a monthly basis, so you just make maybe 8 or 10 different decisions a year. Some of you on a weekly basis, you might make 20, 30, 40, 50 decisions within a year. And then daily, you might make 150, 200 decisions in a year. It'll come down to developing a systematic method that's followed all of the time. Now, even if you are a long-term investor, you still want to keep tabs on things every day, every week, and every month. If you are more of a short-term trader and you're looking at doing things on a more daily basis, and I'm not talking about day trading. I do not teach day trading. I'm talking about positions that last anywhere from days to weeks. You still need to look at things on bigger scales. You still need to keep an eye on what's happening weekly, what's happening monthly, because the big picture will fold down into the little picture and have more of an influence on what you do each day. And believe it or not, your plan for any particular day may be to do nothing. If you reach a conclusion, nope, I just don't like how things are right now, I'm just going to wait and see if things make more sense tomorrow. Another thing that I'm really, really big on is that the plan that you developed, you want to have this plan, develop this plan, and refine this plan when the markets are closed. You don't want to be making things up, especially if you're new to the financial markets. You're not good enough to dance yet. You're not good enough to see what's happening and immediately make a decision and then go in that direction. You're just living off emotion at that point. We want to sit back when the market is closed, when we're not in the heat of battle, when we don't have all these pressures on us, and say, okay, what is going to be my plan tomorrow? If you're a longer term investor on the weekend, you may sit down Saturday morning when the markets are closed and say, okay, this is what happened in the past week. Now, this will be my plan for the next week. When we're putting together this plan, we want to define some things. We want to look at current market conditions. Are we in an uptrend? Are we in a downtrend? Are we going sideways? Are we getting a lot of clues from the market that's really helping us to determine what we think will happen? Or are things pretty muddy right now? I will tell you that it's always gray. It's very rarely black and white. What we need to do is take the good, take the bad, put them together and say, okay, overall, I think the market is headed higher from this point or lower, or it's probably going to stay about the same. but we need to know what are current market conditions. And that's what I do each day in my videos. I have a daily video update that I do for the members that I have, where I go through every day and explain, this is what happened today, this is where we're at, and this is where things look to be developing for tomorrow. Then I also do weekly videos, where I take the whole previous week, analyze that, and then look at the week ahead and say, okay, this is where things look to be right now. Then I also do monthly videos, and I use that same basic format, looking back and then looking forward. A very simple example could be, let's say you go on a little vacation and you stay at a hotel and you're all excited because they have a pool at the hotel. Well, you go to your room, you unpack, and you put on your swimming outfit. Do you just run up and jump in the pool? No. It might be 33-degree water. You don't know. Or it might be 150-degree water. You don't know. You walk up to the pool and you stick your toe in or you stick your hand in to say, okay, this water feels good, or it's too cold, or it's too hot. You need to test the waters. Well, we need to do the same thing with the market. We don't want to just blindly jump in, not knowing what's happening. What we're trying to do is get out of the gambling realm as much as possible and into the mature realm, where we're actually implementing a plan with a strategy, knowing that we're not always going to be right, but we're not just hoping for the best. So we want to have a strategy for the next day, week, or month, no matter if you're short, intermediate, or a long-term investor. And I go through and define that later on. But even if you are a long-term investor, you still want to watch the shorter time horizons, because they will filter through to what you need to do in your trading or investing strategy. And then have an execution of the strategy if the conditions of the plan are met. So let's say it's a Monday evening and you're not watching Monday Night Football yet. The game doesn't come on for a little while. So you sit around, you look at current things, and you say, okay, tomorrow, this is what I'm going to do. The nice thing about the stock market is, at least for the immediate future, it will always be there. It's okay if you wait a day or two, or a week or two, or even a month or two until you see things the way you like them to be before you actually get involved. But you only get involved if the conditions of the plan that you have are actually met. One of the worst things that somebody can do is say, forget this, I'm tired of sitting around waiting, I want to try to make something happen. You'll pretty much lose every time. You need to know what you're looking for, and when those things happen, act upon what you see happening. Then you also have to have an exit strategy. It's one thing to get into an investment or a trade. It's another thing to get out of an investment or trade. And what we like to do is set this up before we even get into a certain position. We want to have as much of this all mapped out ahead of time so that if certain things do happen, we already know what we will do. So this exit strategy can define something like a profit target. Let's say you get into a stock at 10. If this goes to 12, that's a 20% return. That's when I'll go ahead and get out. If you do adjust things, you want to always adjust them in your favor. Don't rationalize and say, okay, well, it went down 10%. I'll get out if it hits a 20% loss. And then we hit that level and you're like, well, maybe I'll wait for a 30% loss. That will kill you. But you can adjust things if they go more in your favor and set things up so that you use tools that are available that actually take you out of the market. Then also a loss target. And I try to keep my examples very, very simple because I really want people to understand the concept. But let's say you get into a stock and it's $10 per share and you're going to buy 100 shares. So that's $1,000. And you decide beforehand, I'm willing to lose 20% of my investment before I'm willing to admit that I was wrong. So that means if you get in at 10 and it falls to 8, boom, you're gone. Others, they see that as too much risk. 20%? No way. So they may say 10%. So a $10 stock will fall to 9. You get out at that point. But we need to set this up before we even enter. And then a time target. There are some strategies that we do have to base them on the calendar. There are things called options out there, and they only last for a certain period of time. And we have to be aware of when they're going to evaporate into nothing. There are other strategies that you can implement on a quarterly basis or on a monthly basis or on a weekly basis. And it's more of a time factor that you have to worry about rather than just a profit or a loss factor. The idea then is that it's not going to happen overnight, but if you want to have consistent success, it will be experienced if you have a well-defined plan and that plan is actually followed. A general plan is developed that applies to all investments or trades. And that's what I help people do. What do you want to do? Do you want to see capital growth? Do you want to have things that generate income for you? Do you want to be really conservative with what you're doing, or are you willing to take more risks in what you do? And every person is going to be a little bit different. But we come up with a general plan, and then we start working more into a specific plan. This is developed based on each individual investor or trader. If I took 100 people and they all took my class, everyone would be a little bit different because we're all at different seasons in our life. You don't do things when you're getting ready to retire that you were willing to do in your 20s. You don't do things when you're married that you did when you're single. So you have to adjust things over time. And I address that more throughout this course. So what is a path to success? In the program that I have, and this class is part of that program, I have other classes that go beyond this. I help you to overcome fear. I help you to overcome greed. I will try to help you develop into a mature investor or trader. Now, why do I keep using that investor or trader thing? It comes down to a tax ramification. The general rule is if you have an investment, that is something that you've held on to for longer than 1 year. If you hold on to something less than 1 year, that is considered a trade. Then following a plan that leads to consistent success. Notice I said consistent success. I'm not teaching you how to have 100% success. I'm teaching you how to have consistent success, meaning that you'll make some mistakes along the way. There are times when you do everything right and still lose, just like there'll be times when you do everything wrong and still win. The idea is to have a lot more success than failure along the way, but even more important than that, to see what we call the equity curve. If you start off with $1,000 and over a period of time it grows to $1,200, $1,500, $1,800, $2,000, that is consistent success. You might even have a losing record overall because your losses are small, but yet your profits are large. So that ends Module 2, Section 1. Thank you very much, and I will pick up with things again in Section 2.